Hi everyone, hope you had a great weekend. In this video, I will cover my Elliott Wave scenarios on the 8-hour time frame, 4-hour time frame, and the 15-minute time frame. Starting here on the 8-hour time frame with the primary, a 5-wave finished impulse to the upside, looking for a bigger sideways or deep corrective structure. First main area of support is this wide box between 105.8k and 100.7k, which is the previous range. Now, in this area, we would look for signs of strength and price to move towards the upside to create a high and then another leg towards the downside. The reason why you want to see another leg down and a bigger corrective structure is because you would like to see a corrective structure end after the 0.382 fib time, which is this vertical line on the chart, which is taken with the fib time tool from the low to the high of this move towards the upside. And basically what you're doing is you are comparing this move up in time against the corrective structure in time. And it is very rare for a corrective structure to end before a 0.382. It happens, but from a theory or probability perspective, if you would get a move towards the upside, you prefer to look for a bigger structure after a 5-wave move is finished. Now, generally a minimum retracement target for a corrective structure after an impulse is the 0.382 at 97.6k, taken also from the low to the high. Common area 05786 starting at 93.2. Absolute minimum area would be the 0.236, which now is touched here at 103.1k. It remains a rare target area for a corrective structure, but in a strong trend it might be relevant, and you would need to get a very sideways, very shallow corrective structure. As mentioned, it has been hit over here with the recent low, and it's just a level that I have on my chart just in case, just to keep an eye on it, I suppose. Now let's then zoom in to this area over here. So we go to the 4-hour time frame, and we zoom into the corrective structures, because there's basically two things you're going to be looking at. Now, in this case, you would need a 3-wave structure to the downside, counted as a wave W or a wave A, followed by a move to the upside in an X or a B, and then another leg down. Now the WXY can be two different WXYs, double zigzag or a sideways WXY. Now a double zigzag would mean a zigzag to the downside in your wave W, get a move up in X, and another zigzag in a wave Y. This can become a deep corrective structure. This can be a structure that could reach the next range over here at like the mid-90s. But if wave X touches the 0.7 that you take from the start to the end of your wave W, currently sitting here at 109.3k, the probabilities for a double zigzag significantly decrease. In other words, the probabilities increase for price to then create a horizontal corrective structure and not a deep corrective structure. In that case, you would look for a sideways WXY, WXY continuation up, or a flat A, B, C, where it is most common for wave B to take out the origin of your wave A, which currently is the all-time high. Now, another corrective structure I want you to keep in mind is what you see here on my chart, and this would lead to a more deeper correction. So here you have your 1, 2, 3, 4, 5-wave impulsive structure, followed by a 3-wave move up in B and another 5-wave move down in a wave C. A 5-wave structure to the downside is never alone. It always needs a partner leg. So as long as price here does not touch the invalidation, which is the low of your wave 1, because wave 1 and 4 are not allowed to overlap, the invalidation sitting at 106.6k, you at least have to be aware of this scenario if price here takes out this low. Now, an interesting area of support can then, of course, be the low over here of this range. Grab the liquidity of these 3 pivots. And also, this low is the low of the weekly gap. So if you would go to the weekly time frame, then you will see there is a gap here, and the top of the gap is that particular low at 100.7k, which is the reason why I keep an eye on that particular level. Now then one would look for a 3-wave move up in B as mentioned. A main area of resistance I have to the upside is this blue box here between 108.9k and 109.7k. If you want to see all of my levels on the chart, then here you go. This is what's currently happening around a price. The levels that were touched over here have been removed. The low here touched the point of control of this range. So that one is now off my chart. And also to the upside here, we did have a point of control of this range, which is also touched. Now you can see there's a lot of levels here towards the upside. To the downside, value area low at 102.5, then the weekly gap. And below the weekly gap, there's not too much going on. And then we have 96.5K, which is the high time frame range point of control of basically this whole range, right? So the previous all-time high range, this whole structure point of control at 96.5K. Now then we have the alternative on an 8-hour time frame, which is what you see here on my chart. So it is an unfinished impulse. You add another 1, 2 to create another 4 and another 5. Area of interest remains the same, which is this white box, because a wave 4 of a higher degree tends to find support on the wave 4 of a lower degree, which is this range over here. This wave 4 just preferably ends somewhere in or around this box, right? And then you would look for a wave 5 to the upside. Now wave 4 has to be a 3-wave corrective structure. It can't be a 5-wave structure, right? So if this turns into 1, 2, 3, 4, 5 and a clear impulse, you would look for another leg, another move down, and it would lower probabilities for this scenario. You really want this to be a 3-wave structure and then continuation to the upside. Now on the, I suppose in the short term, price action between this scenario and the finished impulse scenario, this one is relatively similar, as you would look for support in the same area primarily, right? If you lose this area, then the next range is up at 95, right? So you just go from range to range basically. But short term, the area of interest is similar, is basically this white box here. And then you would look for price to move towards the upside. And then depending on the structure, we will know if it's corrective or potentially impulsive for a wave 5. But the first thought is going to be part of a corrective structure, not part of a impulsive structure in a wave 5. Now for this wave 5, an important area to the upside will be this area here, around 120, 119.9 to 125.7K. And this is an area that is found using the KRZ method, which I don't really go in depth in this video. It's something I tend to do in live streams, for example. But just to show you the KRZ pools that I do. So it is fib related because it's above the all-time high. So I use different fibs and methodologies to find areas of resistance. You can use fibs that are Elliott Wave related, but the KRZ method is not Elliott Wave related. It's something that I found myself many years ago when I took a couple of losses over here in August 2021, and I analyzed what went wrong, and then I just stumbled upon this method. So what you see here on the chart is what I like to call KRZ pool. So over here, you have the range, price bounced from the KRZ pocket, right? And that's why I won't explain the name, but that's where the name comes from. And then you want to see a breakout on the other side. And when that happens, these pockets over here are going to be support resistance areas, right? And you can have different KRZ pools adding to becoming confluence in a particular area. So here you can see price move towards the upside, right? Candle closed over here against resistance, but we broke through. Next area of resistance, support, right? Resistance, support, resistance, bit of support, broke down, go back to the next area, back up, and here we are again, right? Once again, finding resistance here in this pocket, this time the minus 2.38. But the next level towards the upside is this one here, 123.4 to 125.7, right? Which is my aware area. But if I show you my other pool, which is a logarithmic pool, so the one I just showed was linear, this is logarithmic, then this one is a little bit different. It's pulled from this far back all the way here in February 2023. And you can see that price found support in the KRZ area, then moved up, resistance, support, eventually it breaks. Couple of candles of bit of resistance over here, continue, resistance, right? Again, bit of ranging. Next area, didn't really do much. 73K, all-time high, inside the pocket, right? Resistance, support, resistance, support, resistance, breaks through support, right? Eventually tests the lower one, and we come back towards the upside. And guess what? Resistance SR area, I suppose, support, and now we move towards the upside. Now, currently, we are above this pocket here, 101.3 to 103.9K, but the next area with this pool is 119 to 123K. So therefore, the previous KRZ pool and this one both have their next pocket in this area. And you do like to check, like, is the pool nicely respected? So you keep an eye on how the fibs reacted or how price reacted to the fibs. And then the next area is going to be an area of interest, no? So naturally, therefore, my aware area here on the chart, combining these two pools, is going to be an area of interest, especially if an impulse locally would not be finished and we would get another 5 towards the upside. But of course, for a 5 to move towards the upside, you would need a 4 to finish, and you need impulsive structures to the upside on the lower time frame. Now then we go to the lower time frame. And starting on the lower time frame with the bearish scenario. So here we then have a corrective structure to the upside. In this scenario, we would then have a WX and then another wave Y towards the upside. So in this case, this high over here, for the ones wondering, is going to be a wave B, then a WX and a Y inside wave X. So it's basically a double zigzag here towards the upside. Inside your wave Y, another ABC. But because price here took out this high now, right, this one over here, we cannot end wave Y at this particular top. We have to put this top as a wave B, so it then becomes your wave A, B, C, B, and then a wave C towards the upside. Even though, of course, it does look a bit three-wavy to me, right? Long range, short range. Could this be your wave 4? 1, 2, 3, 4, 5. Well, that's going to be very low time frame counting, 3-minute stuff, which I don't like. I don't like to do. So, with this in mind, yeah, there is a possibility you got a 5 wave here. You finish C, finish Y, and you turn around. Inside this B, you then have a running flat A, B, and a wave C. Wave 3 is not the shortest, by the way. Wave 1 is shorter. And wave B did not touch the 1.618, which would significantly reduce probabilities. But a running flat remains the rarest flat structure. This also is quite a high B, almost touching the 1.618. Something to keep in mind. Now, the low time frames, they can be very messy, right? So the higher time frames are more interesting to keep in mind, right? So this is your multi-1-2, which would be your most bullish scenario, right? 1-2, 1-2, another 1, bigger 2, and then continuation up. Invalidation is the low. Don't want to touch the 886 at 104.5K, which would significantly reduce your probabilities for this scenario. And if you reach the invalidation, basically goes out the window. I wouldn't really look for a 1-2 like this, where, I don't know, you now need another 1 and another 2. It becomes very messy with regards to 1-2s. And finally, a diagonal 1, 2, 3, 4, 5, 5 in. Look for a bigger corrective structure. Preferably ends after the 302 again, right? Sitting on the 2nd of June at 6:15 p.m. Central European Time. Common target area on the chart starting at 104.5. Minimum, generally minimum retracement target 302, 104.8. which has been touched, right? Now, after a diagonal, you look for a corrective structure and then continuation to the upside at a later stage. Invalidation is the low. Now, the lower time frames from an Elliott Wave point of view, they can be messy. I just wanted to show them. I myself don't really focus from a trading perspective on the low time frames here at the moment. I'm more interested on the higher time frame, which gives the directional bias from an Elliott Wave point of view. So the 8-hour for me is more interesting, and therefore in general this whole area to me is interesting from a trading point of view. Now then we have some news as well this week. So on Monday, on Tuesday, and on Wednesday, and Friday as well, by the way, we have some high impact news. Times are Central European time zone, so make sure you trade safe. Can increase the volatility on the chart. And then we have the probabilities, and the probabilities are only focused on the 8-hour time frame, which is the one that I focus on at the moment. So the low time frame stuff, it's fun to know where's the invalidation and etc. But the 8-hour to me is at the moment more interesting. So finished impulse has a higher probability compared to an unfinished impulse. So in other words, a bigger corrective structure compared to look for 4 and then a wave 5 to the upside. even though the area of support, and that I suppose is important, area of support is the same for both of these right here. This is your first main area of support, right? If this doesn't hold and you go down, then a unfinished impulse becomes very unlikely, right? Because this wave 4 is then not going to hold the lower degree wave 4, and you're going to move to the next range. Of course, you see wave 4s here as well, but that is 2 degrees, 3 degrees lower, which is not really something you like to see. So preferably this holds for this scenario. If it doesn't, lowers in probabilities more, right? So at the moment, this remains the primary, but on a shorter time frame, right, if this over here holds and we would look for price to move up, then the price action is relatively similar, as here you would also look for price to move up into some pockets of resistance. And then if it's impulsive, yeah, maybe we're looking for a wave 5, but that's something we'll be able to discover as we get more information with the chart printing candles. I hope this video was helpful or valuable to you. On the left, you see a video on the simplest way to use and trade Elliott waves without even counting. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.